All right, all you devils out there, happy Friday. Sam here with you. Well, it's the 16th of September here, a little after noon. So, of course, we're going to look at Bitcoin. I'll probably take a peek at Ethereum as well, see how that's responding to the merge. I happen to have the S&P here right next to Bitcoin as well. We take a look at that correlation, perhaps a peek at the dollar and see what's happening there, how that's influencing what's going on in crypto. So we'll dig into all of that. Of course, a bull and a bear count and maybe some ideas about some shorter term trading opportunities. And we will dig in right after a word from today's sponsor. Our sponsor for today's video is bitget.com. Established in 2018 and registered in Singapore, BitGet is currently serving over 2 million users in more than 50 countries around the world. There are 296 coins and 354 trading pairs available on the exchange. BitGet's 24-hour volume typically ranges around 300 million, meaning you'll find excellent liquidity. And while BitGet offers you a wide variety of spot trading pairs, where it really shines is in the derivatives markets. Here, BitGet is among the top 10 exchanges worldwide by trading volume and offers 95 trading pairs. Signing up is fast and easy with no KYC requirement for trading. That said, KYC clients will have access to additional features of which you can learn more via these drop-down menus at the top. Once you've signed up, you can fund your account by depositing crypto or purchasing crypto. If you click the link below this video in the description and you fund your account with $1,000 or the crypto equivalent, you'll be eligible for a $150 bonus or a free month of the TradeDevils University educational membership, a $200 value. Okay, thank you, BitGet. Hey, one thing I should mention here, because this came up, we had several of you interested in the free membership in our educational program. In order to take advantage of that, we got to have a way to communicate, and the easiest way to do it, and what I would recommend if that's what you're interested in, you've got to join our Discord. It's free to join, so you've got to go to the website at TradeDevils.com and join in the free membership. That'll drop you into the Discord, and then you let us know, hey, I'm interested in the free month of the educational program. Otherwise, I don't have a way to give you the access, not only to those channels within the Discord, but as well to whichever belt you would typically, I'm going to assume it would be the blue belt. But it might not be. It might be someone who's already blue and looking to get a month to go after purple. So just keep that in mind, but that's particularly for those of you that are not part of our membership. And again, it's totally free to join us, right? So that would be the case no matter what. Free to join us, and then you can just drop us a note and say, hey, of course, let us know that you funded your account, and then we'll hook you up. Okay, with all that said, let's get to it. Now, I'm going to start right here with, what have I got here? I've got a daily. I've got Coinbase here, just because I need that history. So if we're going to look at this, and this is one of several accounts, right? Again, you could count this several different ways. This seems to be the most agreed upon count. So if we're going to go from the 18 low, and we're going to work 1, 2 into the COVID low, and on the assumption that we completed an impulse here, well, what's it going to be? Well, again, in terms of the larger structure, I think we're okay just calling it a 1, right? So now, of course, there's more history to that, but at this moment in time, looking at this as a completed impulse and the depth of the retracement, this seems the most reasonable count. And now, of course, things change, right? I mean, I've changed this count multiple times as the market has revealed itself. There's still a possibility here that all we've done is complete a 3 and this is a 4, and that is the most hated count, right? But it has not been invalidated, and it will not be invalidated until we take out this 1. The reason people hate that count is because it's so far off if you take it out of log scale, right? It makes you immediately think 2, but yeah, we shall see, right? So I don't eliminate it, although many have eliminated that count. So, but let's get to it here. So if this is 1 and we're coming down for a 2, well, we can see here, if this is the 2, well, we have yet to make, right here would be 50. We're in between the 30 and the 38.2 and the 50, right? It's not that it's unheard of that we would only that we wouldn't make a 50, obviously. Right? It'd be interesting if we came down here and wicked the 50. If we did put in the 50, and then you still couldn't eliminate the possibility of a 4, right? Unless we overlap that, right? Then you can eliminate it. I know, nobody likes that count. Okay, so, but let's look at the possibility that's a 2. Now, do we really care if it's 2 or 4? Right? What we care about is what comes next, right? Do we get an impulse out of here? Well, it's getting a little shaky, right? So this is the count that. This is a big old puff on the Hopium pipe. This is getting hard to. Can we still get out of here? Yes, we can. But if we take out any of these lows down here, then this count is eliminated, and then we're back to something more severe. And we're going to look at that in a second. But as it sits right now, so here I'm on a daily. If we were going to get out of here, let's see if I do it that way. You can see it. So we'd have a 1, 2, 3, 4, 5 going up potentially for the 2618 up here, which would put us in the 40. What is that? 47, right? So is that even in the realm of possibility? Well, this little sell-off we had this week is challenging that count, but we're not dead yet. So let's. Oh shit! Let's try a 4-hour here and bring that down so you can see how we might. Let me open this up a little bit. How we might do that. Now I'm going to take it out of log just so I can open it up here because I'm not looking at that same range, so I can open it up here because really I'm what have I got here? It's just still 20K range, but it's just a little bit easier to work with. So off of the low here, the proposed wave 5 finishing here to give us the C, to give us a 2, and then this diag here. We looked at this last week, right? Because this potentially, could we have a leading diag here? Of course, ideally, you wouldn't have a contracting, right? You'd have an expanding, but again, market's not always going to give you perfect Elliott. So let's see, what am I? Let's maybe get to a 2. Oh shit, here I'll do it. 195 is good. Okay, so to get it done. Oh, let's change that color here. We can get these in yellow. Shit, I should have done this here. Okay, so we can see an ABC. It's a candidate. Is it a force fit? Well, of course, it would be fairly easy to interpret this as a 5. It's the finish either way is a bit ugly. But what's problematic now here is that from this low down here where we hit the 887, right, off of the idea that this was a 1 and that this was the potential to hold here as a 2, well, we've come down to the 887, right? That's pretty severe. It literally ticked it, right? And then it would appear that we got a 5 that came off of that. It's... Well, we'll dig in a little bit further, but the possibility remains here. It's, again, big old hit on the Hopium pipe that we've gone into a 1-2, and then yet again we've gone 1, and this is a 2. Well, the corrective action here is going to be harder to wrangle into a 3. The push off the low here looks very, very impulsive. It looks very much like a 5. So impulse correct. Okay, how can we fit that in? Well, of course, right. So the easy thought is that this is 1. We're working on a 2, and as long as we don't take out these lows and we start to rally, again, that's a big assumption. We start to rally. If we can come out of here, well, then this count stays alive. We can hang on to the idea that it's 1, 2, and then this would be 1, 2 of 3. Shit, it could be 1, 2 of 1 of 3. Right? There's a lot of different ways that could go. But as it sits right now, we got this nice little launch here, and we'll take a look at, why did we pivot there, right? I'm going to assume many of you already know. And then we just got absolutely faced off of that. But we came down, so we went up impulsively and came down impulsively. We went up through imbalance and came down through imbalance, right? So that CPI report has completely tanked the stock market and upended all risk assets. So it's risk off, where we are right now. All right, so let's push that off to the side. Just a reminder, any of you that interested in Motive Wave, that link is down below. I would tell you that if I could only use one trading platform, I wouldn't even hesitate. It would be Motive Wave, by far the best platform available anywhere at any price. It's remarkable how good it is. Not many people use it relative to the number of people that use TradingView, which is why we're on TradingView. But I would tell you, right, there's nothing it doesn't do, from footprint charts to a very active DOM to Elliott Gann, traditional. There's nothing it doesn't do. Our link's down below, and then I think you get a 14-day trial with that. So something to think about, right? If you're interested in that kind of, that sophisticated of a tool for your TA, that is the best on the market. Okay, so let's come back here. So let's, well, here you can see the S&P, right? So this is the one thing I like about TradingView. I've got good drawing tools here. So the difference between these two, if we look, right, because we can look here. Oh shit, come here. All right, so we can see this happened here, right? And same here with Bitcoin, right? So risk on, risk off, risk on, risk off. Right, simple as that. Well, the difference here. Oh shit, I should probably open this up here so we can see a little better. Okay, so the big difference here with regards to how you would count this as an Elliottitian, I got an A wave here. I got a nice B, and then I got a ripping C, right? So this all makes more sense. Oh, shit, here, let's open this up. So if we came down here, this coming down into this finishing here, it's a bit ugly itself, right? So 1, 2, we're going to get a shorter 3, so the extension's in the 1. 4, and finish with this wedge down into the 5. What do we do? Golden zone, right? Now here is where it got ugly, right? And we've done this today, right? We're breaking the golden zone here coming after the 707, meaning, right, S&P, right, where they've lost the algo here out at this degree. Now that's a 1 hour, right? But we've lost the algo here. All right, so let's come back to Bitcoin here and look at it again. Now I do have some of the Sonar Labs material. Oh shit, here, I'll take it off here while we're doing Elliott. So right, you know, we have also partnered with them and consider that there is, boy, this is as good as it gets for SMC content on TradingView. I continually tell them they're offering it up. It's way too inexpensively, right? So what for the value they're giving it? What is it, $59 a month? Whew. There's a great package. Again, if you're interested, well, shit, here I am promoting. I didn't mean to do that. But directly underneath this link, or this video, you'll find a link to, in our link tree to our Sonar Labs links. And I mentioned that because if you use that link, you'll get 10% off the monthly, right? And that adds up over time. Let's just keep that in mind. Okay, now let's get to the TA, enough promo. All right, so what are we going to do here with Bitcoin, right? So the problem is we didn't get like we got in the S&P, we got that A. B, we got that right here. I just am continuing down here. So, right, we're going to look at a couple of different counts, right? So we just looked in Motive Wave, a possibility. We just looked at this here where, oh, this could be, maybe we've got a diag here into a 1 to give us the 2. Well, what's the alternate, right? If it's not a diag and this is going to break and we're going to head down here, well, we got to deal with this, right? So some sort of correction, and it looks like a series of 3. So A, B, C into a W. This is a cluster F, right? A, B, C into an X, A, B, C, A, B, C, right? You're going to have to slice that up. Oh, shit. Probably do A, B, C like this, A, B, C. So you're into, so all being corrective. Okay, so if that's corrective, we're finishing something here. So what's come off of that? Well, we get an impulse, right? An unusually shaped one, but right, it's not that uncommon to have an extension in the 1, 2, 3, 4, 5. So we don't overlap here. So I get a little diag, or pardon me, I get a little wedge here, but I get it's truly an impulse, right? Because I have no overlap. So if this is not, if we're not finishing here, if this isn't per the other count where we looked at, oh, this could be an A, a B, and maybe we'll get done by a C. If this is going to stay as a 5, well, this just threw just a monkey in the wrench right here, because it looked like we had a candidate here. So let me take this up a degree. Oh, let's put that. What have I got here? Let's go to green here. Okay, so if this is corrective, we'll look at what that could be. And we've come down in an impulse. Well, right, it's either a 1 or an A. All right, again, we'll look at how that would fit in. Well, now coming off of the low here, the rip we got here again, this is a 4 hour here. So what our last low here was September 22nd. We got a pretty good looking 5. See, now what makes this tough is that if this is going to be corrected, so for example, if this is 1 and this is the correction of it, boy, is that a force fit to get a 3 in there. I mean, you're going to force it, either you're going to go A, B, C, or you're going to go A, B, C. It's a force fit either way. So what do you do with that? Well, this of course would be critical, right? So if we break this low, then this is going to get harder and harder to count. But you can already see, oh, hey, expanded B, that's possible. What I'm envisioning here is if we're not going to just keep going down, which is certainly the path of least resistance is lower. So we can look at this and say, okay, well, there's everyone on the planet knows there's going to be liquidity under that, right? And the same way there'll be liquidity under that. So bears, what are they trying to do, right? grab it. So thus, you could see a scenario down here where it comes down to liquidity grab, and then we're coming back out of here, which is actually what would make more sense from an Elliott perspective. Now, market has no obligation to do anything, right? It fucking doesn't care, right? We're just trying to interpret based on what Elliott Wave is showing us, again, which is just crowd dynamics, right? Fear and greed. So if this, it almost doesn't matter what this is at this moment in time. If this is a 5, you're expecting a 3. So if this is a 5, I'd be expecting an A. Now, right, we could overlap here, but ideally it wouldn't, right? To make it easier to analyze, that you'd get that, and then you'd have a better 2, and then you'd start to think, oh, okay, that. Again, whatever this is, right? This could be a 4, right? And this is a 1, 2, and before we go down, right? 4, seeking the 5 below, right? You can see how that could happen. If this is just gonna keep, oh, I want that corner. We could do this, right? You could do this, grab all that liquidity down here, right? Which right? That's why. Oh, it's kind of a good example of why you would never want to sell that. Well, shit, I shouldn't say that. I would never sell that. You're way too vulnerable to that, right? You don't want to sell those dramatic lows, right? If you wanted to, right? If you're dying to because you're convinced it's going to drop, well, this is a better way to do it. Now, I'm not saying don't sell it, right? Because I don't, if it free falls from here, right? You make your own choice here. I'm just telling you that this is a very high risk location to enter at prior lows. All right, so that's why if you were dying to short it, the place to short it is up here, right? So you're short going into that. So that's why it's just trading 101. When it's going up, I don't want to buy it. When it's going down, I don't want to sell it. It seems counterintuitive, but if you're going to survive long term, you got to adjust to that. Here's what retail does. Oh, let's wait until it's safe to sell it. Oh, let's wait until it's safe to buy it. Oh, let's wait until it's safe to sell it. Oh, broke the low. It just happens over and over again. It's just, it has to happen, right? Somebody has to provide liquidity, right? That's why the constant supply of new traders, it's kind of harsh to say it this way, but they need to lose money to get to the point to where they're not going to trade like that, right? But while they're learning, I'm afraid to say, people, it's not that if you're new, you can't get lucky every now and then, right? In a fucking ripping bull market, right? Everybody's a genius. But when we have this kind of difficulty combined with this kind of volatility, you got to choose wisely. And just look what we're doing here, right? This is... just across the board, right? Just assets in general. We're at levels of volatility that very few have ever seen in their lifetime, right? This is about as volatile as I've ever seen it. And I've been through the dot-com crash. I've been through 08, 09, the Great Recession. This is as volatile as I think I've ever seen it. Right now, every year, right, we get more and more algo influence. More and more computers are actually doing the trading. I think it's 95% in traditional assets of all the trading done is done by algorithms and software. So, every year, more and more, it's us against the machines, right? So the one thing we got to be able to do is, as best we can, try and identify the algorithms they're using. And I only know a couple. And when we can identify them, right, just try and trade behind them, right? Because they move the market, right? Institutions move the market. Now in crypto, I know, right? We'll call them whales, right? Trust me, there are institutions in here. But they're moving the market, right? So we just try and get behind them. We don't try to do anything other than tuck in, let them lead. So again, here I digress a little bit, but as we come down here, the reason you don't want to sell here, so just think about it, right? So even if you took it, right? So what's your stress level going to be there? Right? So you're sitting there and you're going, oh, come on, break. Right? It would just take the slightest little whiff of a pullback here and you're going to panic. Right? Oh, fuck. Right? That's why. So it takes all the, trading's not supposed to be a stress bomb, right? Now, maybe if you were just determined because you're just convinced it's going lower, if you took a smaller piece here so that if it does this, you're not completely freaked out right off the bat. Say, oh, fuck, I knew, right? That guy told me I shouldn't. Now you're kicking yourself. But you see what I've just done here? So if it comes down here and then it starts to kick back, well, first, okay, look where you are, right? Wouldn't this be a better place to sell it? You got a fair value gap here, right? So a big gap here. So you have, right, the potential, right, for unfilled orders here. Now you're selling here, right? What I was just saying. We want to try and tuck in behind the big dogs, the whales, the institutions, call them what you will. And this is an algorithm they all use. So it's just what I was saying before. We want to sell it after it's gone up. We've done a lot of training on the smart money concepts of just finding a range. Here, find a range, right? So here's a range. Here's a range, right? Here's the middle of that range. We want to sell when we're in the premium and pardon me, we want to sell at the premium and buy at the discount here. So now here in this particular case, well, here, shit, here I'm fucking it up. I'd have to go up here, right? So we'd have to get here. Now I'd be in the premium. There we go. Better example, right? So here's my midline of that premium, right? Which happens to be the 50, right? So I'm sitting here and I'm going, okay, wait a minute. If I'm going to sell it up here, at least I'm selling in the premium zone. Oh shit, here, let me get this a little tighter. There we go. Okay, so now I'm selling in the premium zone, looking to go down to discount. So that's here, you're selling in the discount, right? That's what I mean by when it's coming down, I want to look for opportunities to buy it. When it's going up, now that's within context, right? So why would I be looking to sell here, right? What's the market structure, right? I mean, we've done nothing, not with few exceptions here. If we go out to a higher degree, it's just lower, low, lower, high, lower, low, lower, high, relentless since the top. Sure, we get little squirts like this where we get a little pop, but did I get a break of structure here? No. I got some change of character, right down at a smaller degree. Okay, I got a little uptrend here. Boy, was that eliminated quickly. Oh, uptrend, what did it run into? Right? Well, seriously, anyone who's watched more than 2 of my videos should have been very alerted to that, right? I mean, you had to have drawn it, right? I mean, I know every member drew it. So once again, right, so this is what retail does. Oh, look at that. Oh, Bitcoin's going, right? Because they don't know that's there. Right? I mean, they get faced over and over and over again simply just because they don't have, it's not that they're dumb. They don't know that it's there. They don't understand it. So since we do, okay, this would be like the worst possible place. You wouldn't want to buy it, right? I think wasn't there yet last week, right? You wouldn't want to buy it between the 50 and the 618, right? Unless you're scalping for ticks, right? I mean, I'm going to assume nobody here watching is trying to do that, right? That's for another. Oh, that's for another topic. Okay, so you wouldn't want to buy here. So what you'd be looking for is what happens at the golden zone. I mean, even if you didn't think about the golden zone, see, look at all these prior lows here, right? All of this support, oh, breaks, now come back, oh, potential, right? Resistance. See, now that wouldn't be enough by itself, right? If you didn't know that, if you didn't know about the golden zone here, you might say, well, shit, I don't know, is that going to hold it? But now you add this. Now we're also, note here, it's a bit of a low volume node here before we get into a higher volume node here. So that's often where the market will turn. Now, is it coincidental? Because you could say, like, come on, man, it hits the golden zone exactly as the CPI gets released and the market tanks. The one thing I can tell you is that there are exactly 0 coincidences in the market. 0. Right? There are no random pivots. You've heard me say that many times before. So what's going on with Bitcoin? Here's what's going on with Bitcoin. We are stuck in a range. So, I mean, if this algo is going to get its target right here, where is it? Bottom of the range. Now, remember, an algo target is not a buy signal, right? Hitting the target is not a signal to do anything. But if we were to come out of here and we got that reaction, right? You can see, right? Is this a liquidity grab? If we get something out of here and then we retrace, okay, maybe you take that. But just think for a second right there. Okay, if you were thinking you wanted to take it there, okay, well, you better stack your odds there. First, how is that going to fit into your Elliott count? Well, so how could it, right? You might think, oh, I got the B here. All right. A, B, C. Maybe we could do it that way. it's not what you'd hope for. But I mean, if it came back down here, where's your Elliott count? What are you thinking here? 1A. If I break here, you're thinking 1, 2, 1, 2 before we go down to 3, right? That's what you'd be thinking, right? So you got to be careful about trying to overthink and project, right? So we tend to do this. We fill in the blank space based on our bias, right? So if we're bearish, we're already filling in the 3, 4, 5, right? We just kind of do it in our mind's eye. So you got to be careful about that. You got to trade what you see. What do we see here? What can I be objective about rather than, oh, well, fuck, it might be a 3, right? This sure does look like a 5. So we got to pay very close attention to this pivot and this pivot because they are live targets, right? The bears are after that. Now, what we don't know is whether they're after that for liquidity because they want to take it higher. And to do that, they have to entice sellers to grab that liquidity before they take it back up. But here's where the Elliottician has the advantage. How would that, if that's what they were doing, right? If they were going to go here, okay, I'm going to grab all that liquidity and then I'm going to rock it back up. How's that going to fit into your Elliott count? Right? Because you get kind of tricky. Now, again, maybe it's A, B. Shit, here I'm kind of making this extreme. Maybe it's something along these lines. I mean, this would be very highly irregular, but why put yourself in that position, right? Again, if I pull back here, I mean, it's pretty hard to argue with just a relentless. Oh shit, come here. Lower. Oh, what do I got there? What is that? I don't know what happened there. Something. I don't know what that was. Okay. All right. So let's see again. Lower low, lower high, lower low, lower high, lower low, lower high. Why are you what? Jesus Christ. What would make you think that now, after all of the low, low, lower high, low, low, I don't have anything? Now, the only thing that might make you think it is that, oh, hey, I do not get a lower low here. I don't get it. Right, so I'm spared that overlap here. So maybe that's why last week it's like, oh shit, I got an impulse. If I could just get a 3 to come down here, maybe we can get out of here. Right, again, boom, right? CPI gets released right as Bitcoin's hitting the golden zone. Well, here you can see it hitting the golden zone and then breaking, right? So. Shit breaks. So now we are out of log, right? We take it out of log here. We're put it back in log, and we're not to the 50. That's the draw for the low. So we're not yet to the 50. This is why people don't like that count as a 4 because we're already through the golden zone, right? I understand. I'm saying that's the count. It's just I'm telling you, it's not invalidated yet, right? So like it, love it, hate it, right? You don't have to trade it. I'm just telling you, it's not invalidated. Okay, so as we sit here, what do we do with this? Well, if this is WXY and this is X and this is a candidate, if we're going to do it as a triple WXYXZ and the Z is down here at the golden zone, if we're going to do that, well, what's the expectation? I'd be looking for an A, some sort of A, B, C, and then I'd be looking for a C. So the alternate here is that this is an A. We're looking for B, and we're going to go down for C. Now let's take those. Oh shit, get them in yellow. Okay, right. So possible, right? The possible. Come back here. Here it gets you. Yeah. Possible. A, B, coming down for a C towards the golden zone. So we'll go 3, 4, 5 over here. Something like that. So if we came here. Oh shit, where's my 1? So it'd be 1, 2, 3, 4, 5 would get us down here. Oh, that's not my best draw. But that's essentially what we'd be looking for. So the entire move would be, come here, A, B, C to finish. Now, the problem with that, I think, why that's, again, maybe a little bit of hopium, is look at the range of the first ABC relative to what would be the second ABC. So we'd have this massive, or let's just do it this way, WXY relative to the next this would be the X, and this would be ABC. So we just have a feeling of this one is so much bigger than this one. it wouldn't feel like it had the right look, right? I guess that's what I'm saying. So, you know, goddamn, I'm trying to get to where we might have an action item here. This is just very tricky trading down here. Again, I keep coming back to this, right? We're going sideways here. So when we're in a range like this, what do we want to do? What do we want to do in a range? Right now, of course, right, this is always great while you're in the range. We want to buy the lows and sell the highs, and buy the lows and sell the highs, and buy the lows and sell the highs until it breaks, or until it breaks. You say, well, okay, well, but if I'm selling up here, what if it breaks? Well, welcome to trading, right? I mean, you got to take some risk here, but that's what the market is suggesting here, that we're in a range until we break out of this range. You trade it as a range, right? It's just the reality of range trading. Nobody knows when it's going to break. So, but it's just like a golden zone breaking. Nobody knows, right? It went right to it and held. So is it going to make its target? Well, the odds would say yes. If it takes that target, well, now we've broken this low. So, best case here, we're going to expand the B, which is, again, getting, you know, you're on the edge of what's reasonable to anticipate. What's the 1, 2, 3, 4? We're down here at the golden zone again. So there's no easy answer down here. Oh shit! Here, let's go to a 1 hour here and see if we can come up with a trade that would make sense. Okay, so let's get all of this out of here. All right, so I got my bit get here. So let's get to what we drew here. Here's the last impulse, right? I'm sticking with an A until I'm forced to change that. Right? We know this, what happened here. Oh, that's interesting. Oh, I know why, because I'm on log scale. Okay, so I get it right on that pivot. All right, so note here, now when I take it out of log scale, from swing high to swing low, it's right into the golden zone. So what is this? Well, it's not what you'd have hoped there if you're looking for a B. Now, maybe it's some, Jesus, what is that? Oh, shit. Who knows what that is, right? There is no shape here that we can really work with, because you don't have a 2, right? Because here, where's the 2, right? We don't have one. Oh, that's a cluster, right? It makes you think more likely a B. Oh, Jesus, that's rough. I don't know what that is, right? So here, what can I see here? It looks like we're creating a bit of a wedge down here. Oh, something along those lines here. We're going to need a little more from this. Boy, it could work if we'd had a 1-2, but since we literally go into the golden zone here to create the high before we scream down and note imbalance. And this is the one that I drew. Let's get that out of here. So, fuck. I guess you can finish it. So I guess you could do it this way. You'd have to do something like this to get that done, and that's iffy as it is. 1, 2, 3, 4, 5 in some sort of a diag to finish that. Is that what we want? No, that's what we're, you know, market doesn't give you always what you want, right? That's what we're left with. So if this is going to be corrective, right? So the whole ball of wax now is, can we hold this pivot? And again, let's tee it up. And let's get platinum on here, right? So 786, 764, next up 887, right? And we're going deep here. Now this is a little pattern here that's prone to, I got nothing underneath. It's prone to potentially leading to some reversal, but my view is all we'd be doing is, if this is the A and this is a B, we're going up for the C, right? Or maybe re-challenge this. Maybe we get a little higher. So you look and say, well, why would it do that? We know we have the Fed next week. You know, the other thing here that certainly is affecting risk assets and Bitcoin and the market, bonds, everything else, is the dollar. So let's just take a quick peek here. So the reason I'm over here is thinking, okay, well, why would Bitcoin start to turn? Well, this is the weekly on the dollar index, right? So here's my dollar futures, this continuous contract. Well, you'll note, right, again, as I've told you guys 1,000 times, the market does not matter. The time frame does not matter. Here we are on a weekly, right? here's the double bottomed here at the 50. So you have a perfect example here of prior resistance offering support at the 50. There's the algo target. Now I want to pay attention, right? You can see I have an alert up here. I want to pay attention if we're going beyond that. Maybe you go beyond here, you get the geometry of the channel, right? It's a bit of a liquidity grab. Maybe. Of course, you can see, oh, fuck, we'd have a couple. I'd use all of that, right? That's all up before we come down, right? So you'd come in here. This is potentially a supply zone, right? We're coming all the way back, right? Now that's going back a lot of years, right? Is that unfilled orders? I doubt it. But what we can see here is we have potential for some resistance here. And we'd be in an Elliott count here and an algo target here that would make sense. Here's the swing. Here's the completed impulse. Double bottom, right? I promise you there were people selling here. There double bottom here at this support 1, 2, 3, 4, 5. So we've got a candidate here for the dollar to be topping. Now, we can't call that, right? We know the Fed's likely to continue to raise rates, and so all of the momentum is for this to go higher, even though we've become just shy of tagging that target. So if this is going to keep going higher, right, that's likely to influence Bitcoin. So what's Bitcoin going to do? All right, so you can start to see, oh, right, if we're going to come down here, if that's going to drive the market down, then we're looking to be buyers down here in the 11, 12K range, right? And between the 50 and the golden zone, anywhere in this range. And just kind of putting all those pieces together, it would seem that if indeed it's 3/4 and there'll be some more data released next week, and this is going to continue. We're going to go, perhaps we go to second target up here. We get the -6.1 up here, which would be, approaching the, oh shit, I think it is not. Oh no, it wouldn't be. We'd be approaching the prior pivot up here. Maybe we're going to 120 in the dollar. Well, tanking the stock market, tanking risk assets. That's not right. Even though you think, oh, King Dollar is good for us. It's if you're trading Bitcoin, we're trading against it. So let's dig in here. So what's a trader to do? Well, of course, no trade is, if you're sitting and hodling, you got to have conviction in the long-term view of it. If you're, here I'm in the log again. If you're looking to put on trades, well, this would be again kind of the Elliott count doesn't really support a new trade here, right? So again, if this is A, what we really want is this. We want a 3 into a B for a better short. Right now, you don't really want to sell it here, right? So, I mean, you could say, okay, 1, 2, right? It went right to the right spot. Oh, okay, that doesn't really look like it's an impulse leading off into the one of the 3 before we go much, much lower. And then you start to think about that and you say, oh shit, man, 3, 4, 5, are we going down to 10 grand? Well, you could see a path to it. Now, this will be to some degree a function of whether or not this plays as an A, B, C to give us for the WXYXZ, right? So A is in, B is in. Now, right, how much of a C are we going to get? Right here's 10 grand. How much of a C are we going to get? Well, first thing has to happen. We got to get the B right now. Right? Is that even reasonable? Well, again, we've lost the algo here, so we don't have an algo to push us. What do we have to work with here? Let's get this out of here. Well, we are in a supply zone here. Let me go. Bullshit. Let's try a 4-hour. We are in. Here you can see the Sonar Lab stuff kicking in here, so you can see all the potential supply zones above, all the fair value gaps. Now, even if we start to rally here, look what we have to get through. We got a big fair value gap, just as we did here, right? We came all the way back down to the low here. So this is the last demand zone that caused the changes of character here. We don't have a hard break of structure. Shit, we have to go to, I think, 48 before we get a break of structure. So clearly, trend continues to be down. So if we hit here, this looks like it's more corrective than impulsive. So if we get the reaction here, we'd be reacting off of this last little order block down here, this little demand zone here. But that's got to, first thing it's got to do is clear the fair value gap here, right? And so this is, since we're so recently relevant, you can certainly see how there could be unfilled orders here because this moved so fast, right? As soon as the report was out, down we went. So you've got this huge area here of imbalance. So if the market comes back to it, well, boy, you got a high volume node here. You could see how that could set up to head lower. Even that said, if we really start to look at how much work the market's going to have to do to get back through. Oh shit, let's go to. Oh, here we go to a daily. Look how much we've got to get through. Right? I mean, this is discouraging to a bull, but right in a bull market, we'll blow right through that. So we've got supply zone, fair value gaps, imbalances, another supply zone on top of an imbalance, another imbalance. Right, here's where you have to get a break of structure. That's a long, what are we up there at, 48 and change? Right, that's a lot less strong high on a daily that we'd have to get to, and you get through that, then you got a fair value gap on the other side of that, and a daily point of interest for a sell, another fair, I mean, it's going to be a lot of work, right? There's going to have to be a very big change in how risk is being priced for Bitcoin to make that run. So what could be a catalyst for that? Well, of course, the dollar backing off, right? If we hit this and we start to retrace, that might help. The Ethereum merge was kind of flat, although it's not uncommon to see something like that. So you had a little bit of buy the rumor, sell the news. That may take a little time to really show itself and how traders are perceiving it, but I wouldn't be aggressively shorting Ethereum. That's me personally, right? In fact, I've been buying it. But it's, if you're a long-term bull on crypto in general, you're certainly at areas where if you can accumulate here, I wouldn't accumulate with leverage. I'd just be buying spot. There's opportunity down here. Again, as we sit here, you're in a pretty good box here. So as a trader, if we start to break here, if I was looking for the next setup, if we break any sort of retrace back to this, right, because this will be a big hopium, oh, come on, come back into it, right, that would be the next place to sell it, in my view. Right, I don't particularly like what's happening here. This does look corrective, so I'm more inclined to be thinking that there's another kick up. So even if you think about whales, they don't want to sell the lows. They want to take it and induce some buyers here so they can grab more liquidity here and then take it down. It's the same thing at the lows, right? They want to grab some of this. Oh, bring it back. Oh, let's get some of the hopium hitters and then crush them. So you got to be careful down here when it's like this. I would be trading with light leverage if I was doing any leverage trading, right? Which you can do on BitGet really easily. You can trade the futures. Or I'd be trading in spot, right? Just saying, okay, well, if I can park some capital here, I'm comfortable accumulating. That's what I've been doing in Bitcoin and ETH, just light spot accumulation. Oh, I do some futures trading as well. But for longer term stuff, which is mostly what I'm looking at here, so, I started accumulating at 22, 23, right? So just to add a little bit more as we come down here. Now, I'll finish up here. Oh, shit, 41. God, I didn't mean to go this long. Wanted to get into Ethereum as well. Maybe I'll do that tomorrow as well. Let's look at the order book here. Oh, right. There's another recommendation of ours here. Let's get you in there. All right, so trading light, right? So you can see very, God, what they get, damn, they give this away. It's been a really nice order book here. So we've got a link for this underneath here if you want to. Well, I don't think we have any deal there, but if you want to support the channel, if you're interested in this, you use our link. So you can see all of we're just looking at the order book. What's nice here, you can hit these, you can see where their size is, and if you just put your mouse over it, it'll take you to where that is, right? Because it's not always going to be lined up exactly. So if I put this here, I can see, well, I can do it this way as well. I can just kind of look at it here and say, well, there's 114 Bitcoin here. But it gets pretty thick as we go down, so you can see all the levels of support in the order book as we come down. I mean, there's definitely buying interest. Here's our absolute low. You got 200 and something Bitcoin. Oh, I just had it. Ah, shit, I thought I had it. Let's get you down right there. There we go. about 257 Bitcoin down here. So you got plenty of, you got plenty in the book here to be buyers here and to support this. But we start to get a little thicker around 14.15. So not a bad thing. I mean, there's very little up above here, but that shouldn't be surprising that we've got, well, there's shit in the order book up here, but there's not much, right? Just another way to look at where might we anticipate some support. There's very little up above, but I think for the most part, that's because we got a vacuum up here. So you could see how we might retrace right to that high volume node and then carry back on. Right, and then we'd have what we were looking for. Then we'd have the A, the B, the C, and then this is decision point, right? Right, bulls or bears, right, would be an awfully juicy spot to be looking for a sell, right? We'd be right on the edge of value. Here's what I have visible range on a 60. You'd be right at the golden zone, potentially double topping here. You'd have the pattern you'd be looking for. Now you're coming for that. All right, shit. I don't feel like I've given you as much as I had hoped to in this video, right? But I guess they can't all be gems. This is just really tricky trading, right? This is a difficult time to be trading any market. The markets are hyper sensitive to the latest little whiff of fart or speech from the Fed member. I mean, we're so hyper Fed sensitive. It's just a difficult time to be trading while the Fed is raising, right? It's as old as since we've had a Fed. You do not fight the Fed. It's just never proven to be profitable. Right now they're raising, so we got to adjust accordingly. Okay, guys. Well, maybe I give you a few nuggets to think about, a few ideas, maybe just the reality of no matter what your experience level is here, the market is never easy. This is really challenging trading. The Elliott piece is open to interpretation. Let's say it that way. So we're not getting really clear structure here so that we can be really definitive about what we see here, but the market structure is really guiding us. Okay, series of lower lows, lower highs. So until we get some sort of break of structure, which again is way up at 44, 45K, until we get that break of structure, path of least resistance continues to be down. And when you see an opportunity like this right into a golden zone, considering the backdrop and the path of least resistance, all that, even if you were thinking that you were just going to trade into the ABC here, right? A, B, C. All right, and there was a trade there. Now you had to be right on it, right at CPI, right? So, it's this hindsight trading, right? So, but first thing you have to identify it's there, right? First you have to know it's there. Now, when you see the CPI and the market start to sell, you didn't have to get the turn. You didn't have to get it in the golden zone. Sadly, on this one, you got zero up. You got nothing, right? You had no little pullback to try and get into it, right? So you had to be quick on that. Again, nobody said this was going to be easy. All right, guys, there you go. Hopefully I gave you a few things to think about, and I will be, I may do an ETH tomorrow. We'll see how that's look. I'm just out of time here. And then look for those of you interested in BitGet, I'll be doing a kind of a walkthrough of their platform, as they've been nice enough to sponsor us. So I want to be sure a lot of you took advantage of it, right? I mean, it's a great exchange, right? It's easy, boom, boom. You're open and funded in minutes, right? No KYC. And where they really shine is in the futures markets, right? So those of you that like to trade with maybe 3 to 5 leverage, and you're looking for more options in future, you're looking for more pairs to trade in futures, BitGet's a good choice. I think they're number 5 in overall volume and in futures volume in crypto. So a good exchange to consider. I hope you'll give it a try. Like I said, right, you get either, I think it's 10% up to $150 if you deposit $1,000 or more, it's up to 10%. And then of course the other choice is take a free month from us. All right, guys, that's enough rambling from me. You guys have a good weekend. If I don't post anything this weekend, you look for content next week, and as well as a live stream on Monday. Okay, guys, have a good one.